Hey everyone! Darren at Leviathan Financial. Welcome to your weekly playbook for the second week of November. Anyway, straight on with it. The earnings we have out next week, the three I am going to focus on is Home Depot, Cisco and Walmart. And we're going to start with Walmart. There's been a long uptrend in this particular stock, but it's coming to the top of its trend line, so I could quite easily see it come back and retest the lower bound of that trend line. This is a longer term chart. It could take some time. It could just like truck lower in the same way it trucks higher. I want to give this one a little bit more time, so I'm going to look at a March expiration. I won't be running it all the way to that expiry date. I want to give myself some legs and running that through Big Boy and saying that I want to get out of it before expiration. That the trade that I like out of the list is the 130, 140, 150 put fly. It's fair value, as you can see here, looking back historically, it's on its 45th percentile on a constant maturity basis, which is basically looking back at every similar equidistant spread going back historically 25 odd years, and where this one currently sits in comparison. So it's kind of fair value. You've got 50-50, but we want a directional bias on this one. And as you can see here, even if the numbers come out even next week, you'll monetize this one fairly quickly. You'll make more money the closer you get to your target, and it's a fairly wide range, so that's why I like that one. And also it's not very expensive, including costs. You're looking at 94 cents, and so I think this is a good trade if you can get in at that level. Next up, Cisco. And you see from this chart, not quite the same pattern, but again, I feel that it could have a test to the lower bound of that trend line, and I'm willing to go a little bit shorter dated on this one. I'm looking at a Jan expiration, so really I'm going to be looking to get out around New Year's. And so these are the parameters I've put in for Big Boy. I've said it, okay, I want it to go lower and I want to get out around this date. So what does it come up for me? And when you initially run Big Boy, it will come up with every trade it thinks is good, and it will come out with some wacky ratios sometimes that are easy enough to understand, but a lot of the time, certainly for more novice traders and sometimes for more advanced, sometimes just simple is better. So I'll filter down this list, and alright, you don't get as big a return, but I just like the simplicity of this particular put spread. It is the 45-50 put spread. Looking back historically, it's in its 22nd percentile, so therefore it is a good value trade. It monetizes very quickly as well on the heat map. If we go down, it is going to look good. And again, it's relatively cheap. Including costs, we're looking at getting in at 98 cents. Again, this is a cheap punt, and I think it will monetize quickly, and therefore again is a good trade. You've got a wide range as well on that, so yeah, I like that one a lot. And then finally, Home Depot, the Home Depot. I'll screw them with the whatever. Here you've got a classic pattern where it broke through its long-term trend line and has tried to rally back up and looking like it's failing. It hasn't got back above that trend line, which indicates to me that this is not bullish action at all. So again, going for a downside play. How far down? Well, I'm willing to go around the 250 area. Nothing too aggressive. I want a wide range, and I'm willing to again get out of this round or prior to New Year. So simplifying the trades, the one it liked here, and I would go with is a 230, 245, 260 put fly. It's in its 23rd percentile, so it is also good value, more chance of making than losing, and it monetizes pretty quickly. Obviously you'll make the most the closer you get to your strikes come expiration, but again, it's relatively cheap. You can get in this one, including costs, 91 cents. That's your downside. So I think it's a good trade. So anyway, I'm recapping on the 3 trades that I'm looking at this week. In Home Depot, they're all bearish this week. 230, 45, 60 put fly, including your costs, you're getting a 91 cents. So you can buy 109 of those. For Cisco, including costs, is a 45.50 put spread of 97 cents. You can buy 102 of those. And then with Walmart, 130, 40, 50 put fly at 94 cents, buying 106 of those. Now it should be noted that, as you all know, the markets move all the time, and at the time of writing, this is what the trades are available to do and what we recommend. The market moves. It may be completely different when you walk in through the door on Monday morning. If you like any of these trades, just ping me and we can do a quick rerun on Big Boy, and it may come up with the same numbers. You may go, no, I like this trade now instead. But these are the direction trades that at the time of writing we like. One of the other reasons is that after a very poor bond auction on Thursday, I'm concerned that yields may start to come higher again. Just looking at TLT here, which is an ETF based on 20-year bonds. I mean, it looks pretty bullish, and the price action over the next couple of days, we'll see. If it gains support and bounces off, which it could do here, then I think the bearishness of the stocks I suggested will be based purely on the numbers. But if not, and it turns out that this was what we call a dead cat bounce in the markets, then watch out, because the stock market, which has done very well recently, had a good run, is in trouble. And running Big Boy on TLT for a December expiration, if you think that yields will go higher, it wants, nice and simple, don't even have to run a heat map on it, buy the 85 put. That's it, simple as that. A lot of legs, you'll make money if you think yields are going to go higher. Numbers next week, we have CPI and PPI, so watch out for that. And just bearing in mind, like last week we had a more bullish tone, which has done well, and there you may want to cash in if possible. I mean, you've made money if you've done these trades, so why not? It was the S&P, the DEES, 45.60, 45.80 call spread, paying $1.78. That's now $2.08. Bitcoin, we looked at the 47,000, 48,000 call spread, paying $113.78 on that. That's now $133. You could stick with that one if you wanted, but again, you're in the money. But I think that still has more legs. And then Disney, that one did pretty well. We suggested buying the 105 calls, paying 118, and they're now 227. Not a bad return for your money for a week. So, but again, if you're still bullish, hold on to them. But given that I've got a bearish tint this week, I'm going to suggest maybe taking some money off the table. And I saw a couple of posts this week. The one tip I would give you: never, ever, ever regret taking a profit. And with that note, I wish you all a wonderful weekend and good luck trading.